All right, welcome back. Today is Thursday, April 14th. It was a shortened week. Tomorrow, the markets are closed for Good Friday, so enjoy that long weekend. My guest today is Ian Cully. Ian is a commodities and currency expert over at All Star Charts. Ian, how you doing today?
Excellent, Pat. Thanks for having me.
Yeah, of course. Let's get right into it. So another down week for stocks. The NASDAQ fell about 3%. S&P 500 fell about 2%. The Russell 2000, interestingly, led and rose about 0.5%. But looking deeper at that daily chart, not too much to like. It closed on the lows of the day going into a long weekend, and it couldn't even hold that VWAP there in pink from the March lows. So definitely some caution still, not a lot to love. Looking at the sector action this week, materials led, energy also rose, energy and industrials rose about 0.5%, while tech got hammered. Most of that was pressure from rising rates, I think. The 10-year hit multi-year highs. So we'll see how that ends. But, when I think about this week and what kind of defined it, I know I sound like a broken record, but the strength continues to be concentrated into commodities and commodity-related stocks. DBC, which is kind of the benchmark I use for commodities, rose about 5% this week, pushing that year-to-date gain to about 35%, while stocks and bonds are down about 7-8% respectively. I'm using the AGG there. So Ian, when do you think this ends? Do you want to be looking for resistance and reversals here, or do you want to be erring on the side of the trend so far?
I mean, I have no idea when it's going to end, but I definitely don't want to be selling commodities right now or any commodity related assets. I mean, DBC is up 35%. It's on the year, and it's only the middle of April.
Yeah, I mean, I think this whole super cycle thesis, right? A lot of it's based on the idea that fund managers have been unexposed. I mean, they abandoned this asset class because it underperformed for years. Buy and hold, the 60-40 portfolio, so popular. So this asset class, it's also got a lot of those dirty names, those dirty energy names that a lot of people have been trying to stay away from. So again, abandoned asset class, and now you're seeing them outperform for the first time in a while. So a lot of it's that performance chasing. And to your point, that could probably continue for a while, right?
Absolutely. It could continue for years. And most commodity super cycles do continue for years, decades. So yeah, I think we're in the very early innings of a major commodity super cycle. And when we look at the CRB index, heavily weighted towards energy, and then we look at an equally weighted commodity index, I mean, they're both headed they're both headed higher, and there's no signs of any trend reversal at the moment.
Yeah. Okay. So the CRB, the reason you're looking at that equal weight is because the CRB is very heavily weighted towards crude oil and energy related. But your point is basically that it's a broad commodity rally, right?
It is. So as we go through this cycle, as we go through this bull run in commodities, we want to continue to follow the strength.
Well, where is that? Because it's like getting overwhelming, and it's like every day I hear about a different breakout from a different commodity. Some of them I haven't even heard of. One day it's sugar, the next day it's vanadium. I don't even know what vanadium is. But so what are your favorite areas of strength within commodities right now?
Well, right now it's energy, and I know you'll think, oh, hey, crude oil, almost went to 150. Now it's all the way back down at 100. But I mean, this week we had a massive breakout in natty gas, and we're seeing a lot of strength coming out of uranium as well.
Well, let me stop you there real quick, because all these breakouts are great, but how do you play them? How does the average person at home, or even if you're a fund manager, are you going to trade the futures? I mean, what are some of the stocks and ways you can play this theme through the equity market? Do you have something there?
Exactly. There's a lot of ways to play this commodity super cycle through equities. I mean, I'm not going to go out and trade uranium futures.
Good.
But I'm going to look for some uranium stocks to trade. And I brought one today that's really shaping up. I really like. It's Energy Fuels is the name.
What is this? You.
Yeah, making it easy for us, Pat. Making it really easy.
That's 4 U's.
Big base. Want to buy a breakout above $12 with an initial target around $18.50, $19, secondary objective all the way up near 30.
Wow, that's a nice chart.
It is, isn't it?
Yeah. This next one, Peabody, I've seen a lot of people on that one all year, really. But it looks like it's doing it again. It's breaking out again. It's making another go at it. So what do you think? What are some of the levels?
Well, there's a lot of upside potential in the entire energy space. Like you mentioned earlier, like this whole area has just been beaten down for a decade. When we look at the Peabody energy chart, it's been outperforming on a relative basis for over a year now. And as it makes new highs on a relative basis, we expect to see new highs on an absolute basis as well. And that's exactly what we're getting.
Sorry, go ahead.
I really like being long Peabody Energy BTU above 30, with next target around 48.50.
Yeah, that one just doesn't stop. And that's not the only coal name breaking out. I know Alfonso shared a great one. I think it was CEX yesterday. And that's another one just breaking out of this multi-month base to all-time highs. And again, it's kind of hinting that this commodity train is not going to stop anytime soon. So what's this last one you got for us? I'm not familiar with this one.
Had to bring a gold miner.
Nice. Yeah, new highs in GDX. I think it's like almost 2-year highs this week.
Yep, new highs in GDX, and gold's hanging tough above those former 2011 highs too. So that's extremely constructive.
I haven't heard of this one. SSRM.
Yeah, SSR Mining, ticker symbol SSRM. I want to see price reclaim those former 2020 highs around 25.50. We get back above 25.50. I like it long. Initial objective around 36. Secondary target all the way up near 56.
Yeah, I mean, even if it hits that first target, it would complete that multi-year base, and I could see it going to that 161 extension around $55. Definitely possible. Well, listen, I brought one along. It's nothing new. I know we've mentioned this one before, but I think it's setting up again. And it's one that you just want to stick with. It's John Deere, a big blue chip. Broke out last month in March above 400 to an all-time high, and it ran right to that 161.8 Fibonacci extension and kind of paused for a little, pulled back, but we're right back at that level again. That level's around 435 or 434. As long as we're above that, I think we can go to 500, that nice round 500 number. So I think, again, it's one you want to stick with, and it fits with that whole commodity theme that you've been talking about too. You mentioned fertilizer stocks also breaking out. So yeah, Ian, before you go, is there anything in particular you're watching next week? Like, what do you think that first chart you bring up on Monday is going to be?
Ooh, the first chart I bring up on Monday. That's a really good question. I want to see how oats, how they respond. Yeah, I know oats. Oats. I'm also looking at sugar. I thought sugar was going to break out this week, and it's demand's still digesting overhead supply. So I'm just going to keep looking for those areas of strength that are on the verge of breaking out of bases.
Yeah. Well, Ian, thank you so much for joining us and sharing those charts and your thoughts on commodities with us. And I hope you join us again soon. Have a great long weekend.
You too. Happy Easter.
Well, thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week. Thanks.